Hey, hi, good morning, everyone. And today's session is about financial planning. Okay, so I know that generally I upload a video on the technical sides only, and either from programming sites or testing sites or automation sites. So today video is completely about the financial planning, how we should do the financial planning, when should we start. Okay, so let's start. Okay, so our agenda is the first to discuss why early investment. Okay, the second is to where to invest our money and different available instruments. Okay, so the first we'll discuss the why early investments, guys. So whenever we started earning, right? Okay, so before doing the why, the first things I would like to discuss the why the financial planning is important. See, we, most of us, we are the salaried persons, right? And we do our jobs and we earn the money, right? If you don't know that how to do the financial planning, so where to invest, what, okay, how much invest, what to invest, okay, and where to invest, then the whole life till our end of life also we need to work for someone. Okay, so it's better invest our money early as early as possible. Okay, and right instruments. Okay, so that's why I'm suggesting we should do the investment as soon as possible. We should start when we should get the first salary. We should decide it, okay, this much money will go to our and some investment instruments. Okay, and that will also give you the benefit of compounding, right? Because if you put your money for a long time, then only your money will be double and triple, right? So that is I think all of you know the strength or power of compounding, right? So that I don't think so I need to teach you. Okay, so that's why I'm telling you we should start investing very early. Okay, so let's go to the next slides. Okay, see, we have a different instruments. So the first instruments what I would like to prefer is the real estates, and real estates mostly two things comes. The first is the plots and second is apartments. And if both the instruments have his own pros and cons, so the first we will start discussing with the plots. So I will suggest each and everyone, and definitely they should invest in at least one plots. Okay, okay, if you have a very surplus money, the money is coming from here and there, then definitely you can do whatever you want. Okay, you can invest in, but at least the normal middle class, upper middle class family, definitely they should go and invest one at least one plots they should invest, not more than, I won't suggest one or more than one or two. Okay, okay, so plots, definitely before buying plots there are risk also in the documents, other thing, just you can check, verify with some lawyer, okay, with the sale deeds and everything is proper or not. Okay, that khata things we can see 10-15 years transaction we can see from their respective authority. Okay, and go to that respective authority office and just check it out, 10-15 years transactions. Okay, so plots, just see, plot also, if you are buying any plots, see the locations where that location have a potential or not to grow. Because I'm giving you the example of Bangalore. Some of my friends has purchased, and whatever the price they had purchased, after 5 years also the price was the same only, approx same. Okay, but in the few areas we have means I have invested just nearby in the Bangalore city. One more city is there, Mysore, and there we have invested. And you can say that uh, it was the growth was good. We got a good returns. I will say you around 10-13% we got returns, but that also depend on the times when I have invested. We have invested around the 2010-11 times we have invested when the properties here real estate was in the boom, right? I think 2013 and 14 times then real estates become stagnant and then it was not almost it was a constant only. Okay, so it's depend on what time you are investing, but actually real estate investment is a good option. So at least you can go ahead and buy your plots. Okay, and definitely it won't, the prices won't decrease. Okay, so just analyze the area where you are buying, it have a potential to grow or not within 5 or 10 year of expense. Okay, okay, now second is the apartments. So apartments, the one thing I would like to tell you, this is not an investment. Apartments, I don't think so when you buy apartment that is a kind of investment unless you don't have a very surplus money. If you have a very surplus money, then it is fine, you can go and buy it. and you'll get a rent. Okay, but the people middle class family, I definitely won't suggest that they should go and invest in the apartment just for the that it will yield some money. Okay, that is not going to happen. It will simply, you will pay a interest to your bank. Okay, but yeah, if you're buying apartment for your own use, and if you decided okay you are going to stay in that city forever, definitely go and buy your own home. That is, there is no question. Okay, so now it is very clear what is very much distinction between the plots and apartments in terms of investment. Okay, I'll go to the next slide. The next slides, we have option of golds. Okay, and we have a different type of categories in the golds. We have a sovereign gold bond is there, which is issued by the bond which is issued by the Reserve Bank of India. Okay, and this is a 6 years of locking period, and on if you are buying, you can purchase from any banks or maybe from your demat account also you can buy. You will get some interest also. I think 2% interest per years. You will that will get credit into your bank account. So gold is a kind of hedge type of fund, I will say, because when the everything is, because even in the past, your our ancestors also they used to use gold. Okay, for any financial transaction, and it's a very reliable type of you can say the instrument it is. Okay, okay, so. Okay, even our all the words banks, right, they keeps the golds, and respective the value of the golds, they print the money, right? So definitely gold is a value, and it's a kind of hedge fund also. When the stock markets will go up, definitely the gold prices will be either it will go little bit down or it will be constant. But when the market or recessions, anything worst thing happen in the economy, then these gold prices will shoot up. So definitely we should always prefer the investment in the gold, but not around 10 or 15%. I will suggest we should invest in the gold. Okay, so we can buy the SGF. We have a ETF also. Gold ETF is there in. Okay, that also we can go and buy it from the okay kind of mutual funds. Okay, houses, they invest into the gold only. And then third is a physical form also we can. So we should have some gold in the form of physical also. Okay, don't buy everything in form of SGB or ETF. Buy in some form of physical form also, but not complete. Okay, so that this is a very good investment, gold, I'll say, suggest you. Okay, so in our portfolio, if I have a 1 lakh of portfolio, if we are building around 10 or 15,000, we can invest in the gold. Okay, the next is a saving or deposits accounts, right? So guys, I think most of the people say invest putting money in your FD, it's just destroying your wealth. It's fine, perfectly fine, and the people say it doesn't beat your inflation also. That is perfectly fine, they are all correct. But these FDs, this PPF, NSC, right, that works for emergency periods. You don't know the economy, right, how the people they manipulate the things, stock markets and everything. So what if you put everything, all your hard-earned money into the stock markets, and tomorrow something has gone wrong, like a 2000, what happened in 2000, what happened to 2008, your all money will be gone, right? So we should decide how much money we are going to invest in the stock market, how much we are going to invest into the gold, how much allocation will be in the FD or PPF, right? So come to the first instruments, I think PPF or NSC, and this is around 7%, 7.1 we have interest rate on the PPF, and NSC also around same. So we can choose anyone. So I use a PPF, and that's a very good instruments. It's a 15 years of locking periods, and definitely if you keep on investing, if you're very systematic, and 1,50,000 is a maximum amount that you can deposit per year. And if you keep on depositing, after 15 years you will have a very handsome amount of money, right, so that you can use for buying your house or for any important ceremonies, your families, right, your child educations, marriage, whatever, child marriage, right, whatever, wherever you want, so you can use it. Okay, next is the EPF. This is a mandatory, and that will be cut by your employer. So if you have an options to increase, just increase it, and definitely it will be give you a benefit at your once you will get retired. Okay, third is FD. I will suggest you should definitely allocate some money every month. You should do the FD. Okay, keep some emergency funds for the 5 or 6 months emergency fund we should have in the FD, and a certain amount of money you should keep adding into the FD. Don't break FD and put into the stock markets. Never do this mistake. Okay, So we should, even whatever the people say, okay, these expert people say, okay, break your FD and put into the stock market or somewhere, don't do that, even mutual fund also. Okay, so okay, so certain amount of money definitely should go in the FT or PPF, or on the EPF anyway it will get detected by your employer. Okay, we'll go to the next slide. And next is in market rights. So this is a place where we can earn a very good handsome return, you can say, around here. There is no barrier actually. You will get a zero also, you will get a below zero also, minus also. Okay, whatever you invested you will get zero, and even you have a you can have a 10%, 15%, 20, 40, 100%. This depend actually where you are investing. Okay, and it's the time. Okay, so now the first option is the stock market. Okay, the stock market, if you want to directly go into the stock markets, you can open your demat account in, okay, and in any there are so many companies are there. Okay, so which they will open a demat account, and from there you can do the trading. Okay, so in stocks, what I will suggest you, that's my gut feeling, don't invest in stocks which you don't know. Only invest stocks which you are using personally, which you are seeing in your day-to-day basis. Like take example of I'm giving you example. See, my bank account is in HDFC Bank. I'm using from so many years. When I see and that is also, that bank is a very big bank of that's a very, it's a good bank, and it's a very big bank, right, of India, right? So I can trust an HDFC Bank. Okay, if you use that applications, their services, they're awesome, right? Now second example, I can take an example of one FMCG company like Hindustan Unilever is there, right? See, we uses his HUL product. Okay, and that product is awesome, right? So we can trust, okay, this company is standing from some hundred of years. Okay, their product is awesome, definitely this company will sustain, right? Okay, take example of ITC. Okay, so very nice company, cash rich company, right? You can trust. So you have to identify such companies which you are using in your day-to-day basis. Okay, so, and such stocks you can buy it. Okay, and don't fall into the trap of any penny stocks or multi-baggers and based on suggestion of any experts. Okay, you'll just lose your money, and it's completely your guts feelings. Okay, and okay, so first of all, doing investment into any stocks, okay, first do your analysis, okay, and then only do the investment. And that should also be some a portion of your portfolio, actually means only 10% or 15% only you have to invest in the stock market, rest you are going for the mutual funds. Okay, so it's depend. Okay, but don't put all your your fruits into the same one basket only. Okay, just distribute it. Second is the mutual funds. Mutual fund also invest your the money into the market only, but yeah, definitely there is some fund manager will be there who will manage your money. Okay, and they have some collection of stocks, okay, the portfolio which and those mutual fund and those portfolio will have some number of stocks. So all the money will be managed by mutual fund managers, and for because he is managing your money, so he will charge something, and that is some minimal charge is there, that is called expense ratio. So I have, so initially I had taken some mutual funds from like SBI. I had SBI blue chip, I had Axis blue chip fund, and then I had Parag Parikh Plexi funds. Okay, so all three were good, and they had given a very good returns. So currently I am only continuing the Parag Parikh, and rest to have closed. Just I had some needed a money, so I just closed those. I had redeemed all the mutual funds. Okay, remaining SBI and Axis. Okay, but those mutual funds are also very good. So generally mutual funds, what I will suggest, okay, definitely for going for the mid cap or small cap, definitely you get a more returns, but there risk is also involved. Okay, so generally I prefer to the mutual funds which they are investing in the blue chip or large cap funds. Okay, because even the market goes also down, okay, this large cap will go down, but very sharply, very immediately they will recover also. So that's the beauty of large cap or any large cap funds. Okay guys, so this is all about mutual funds. Okay, Then we have a ETF. ETF is also kind of like of mutual fund only. This is also managed by the mutual fund manager, some manager, and they will also charge some expense ratio, will some minimal amount. Okay, that is also called the expense ratio. Okay, but the how the ETF is different from the MF. MF, what happens actually is that you will do pay the money in form of SIP, or maybe a lump sum amount you do. Okay, here the beauty is when the ETF is, you can directly purchase this ETF from your demat account. And the thing is, so you can is depend on you when you are buying it. So generally what I do, whenever the market goes down, do the corrections, okay, 1 or 2%, then I go and buy the ETF. So we get all the NAVs at a very lower price. So that is the beauty of ETF, what I see, that how it is different from the mutual funds. Okay, so you can try with the this ETF. And what ETF I have purchased, just I will let you know. So one ETF I have SBI Sensex, where SBI Sensex is the top 30 as top 30 of this 30 Sensex stocks. I have a one more, it is a SBI ETF quality, that is also the top 30, means the best 30 of Nifty 200 stocks. Okay, so that is a good ETF, what I see is. Okay, that's it guys, what I had for this financial planning. So if you have any doubts, if you have something very good suggestion for me, good, you feel okay, and this is also very good instruments to invest it, just please let me know, and that will be a good learning for me. So thank you very much.